Okay, hi everyone. I hope everyone is doing okay. So this is Sipo, and then I'll be going through the payables reconciliation tutorial, which is week 10. So the reason why we're doing this tutorial like this is because you guys are writing most of the week, so we can't expect you to have your tutorials while you're writing. So you guys will watch this video and then try to figure, okay, you will do the tutorial and then watch the video and then mark yourself, and then things that you don't understand will be explained in the groups. So the groups will be opened at some point in time this week. Then you guys will have the chance to ask your questions. So trade payables reconciliation, it's quite one and the same thing with the bank reconciliation statement. So why am I saying this? It's because both of the reconciliations you are dealing with an external statement that comes from a third party. So you have your April statement here that comes from your supplier. So your supplier is Apple Street. So Apple Street sent you the statement, and then as you can see here, there's an opening balance, there's transactions during the year, and then there's a closing balance here. So this closing balance, which is 28,025, it's the maximum amount that you owe to the supplier at this point. So this closing balance consists of two parts, which is the current one and the 30 days one. So the 30 days one is basically what's due to the supplier, but then that's more than 30 days. So you have been owing the supplier this much for more than 30 days. And then this 17,880 you have been owing to the supplier due to transactions during this period, which is April. So, and then right here down you have your subsidiary ledger. So this is basically your accounting books as a company. So your company at this point is Bluebells Traders. So this is your accounting record. So this is your trade payables transactions with the supplier Apple Street. So yeah, it's cool. So if you look at your required, it says additional, okay, and then you have your additional information to help you to determine what went wrong. And then you have your required, which says you must calculate the adjusted balance for the credit supplier Apple Street for the month of April 2019, and then also prepare and present the supplier reconciliation statement for the month. So we will be answering these two questions using Excel. So trade receivables. So how do you do the trade receivables reconciliation? So as you can see, you have a closing balance here which is 28, but then your closing balance in your subsidiary ledger it's only 13, and then which doesn't make sense because now the same transactions that the supplier records should be the same transactions as you record, but then during the month there can be maybe omissions and errors that will cause the closing balances not to reconcile. So now you will do the reconciliation statement and also correct your own accounting records to make those closing balances be the same. So how do you do that? So remember, to your suppliers, the suppliers see you as a debtor. So your suppliers see you as a debtor, and what are debtors? Your debtors are your assets. So basically, we are an asset to Apple Street. So every time we make a purchase from these people, they increase it on the debit side. And then every time we pay them or return some of the goods, they decrease it on the credit side. But then if you come to our accounting records, it's the other way around, because now our suppliers are seen as creditors. So every time we make a purchase from them, we increase on the credit side, and then every time we return goods or make a payment to them, we decrease on the debit side. So basically, if we were to compare the two statements or the two source documents, the debit side on the statement will be compared with the credit side on the subsidiary ledger, and then the debit side on the subsidiary ledger will be compared with the credit side on the statement. So I've done that for you guys just to save time. So this is your starting point for the supplier reconciliation. So now you compare the debit side here with the credit side here, and then the credit side here with the debit side here. So fine. So now I've looked at the two columns and then I've compared everything. So here we see there's an invoice here on the 1st of April. but then the amount now it's 4.560, but then here the amount is 4,000. So basically something went wrong. And then here we have a credit note of 450. The credit note is not this side. And then here we have a payment which is 5,500, and we also have this payment here. So I scratch it out like this because it's correct. We're not dealing with it. And then here we have an invoice of 6.5. Here there's no invoice. So there's a circle, something went wrong. And then here we have a credit note, then the amount is 1,230. Here the amount is 1.1. So something went wrong. So we circle it. And then here there's a receipt from customer. So here we made a payment. So the supplier says we made a payment for 2.5, but then in our books we made a payment for 3,000. So basically something went wrong. And also here we have an invoice for 7.8, but then there's no invoice in our books. So we circle this 7.8, and then here we have the credit note on the 19th, and also here we have a credit note on the 19th, which is correct, so I scratch it out. So basically when you're looking at this now, we will be only dealing with all the amounts that have been circled, because all the amounts that are circled, it means it's all the amounts that have problems or errors or omissions. And then now we'll read our additional information from here to determine who made the mistake. So what do I mean who made the mistake? So as you see, our first required is to correct our own accounting books, and then the second required is to do the supplier reconciliation statement. So now I prefer to do these things simultaneously at the same time. So why am I saying that? It's because I look at a transaction and then see who made the mistake, and then now when I get here, every mistakes and omissions which were made by the supplier are corrected using the supplier reconciliation statement, and then every mistakes which were made by our accountants. So if we made the mistake or we forgot to record something, we correct that mistake using the trade payables subsidiary ledger. So now all mistakes made by the supplier, they come here. All mistakes which are made by the business on its own, they come here. So the first thing you do, you need to record your balances, your closing balances. So here, so this is our closing balance. So where do I get this closing balance? So if you look here, this is the closing balance here on top. The reason why I'm using your closing balance is because now if you use the closing balance, the only thing you do now is fix the errors and then put in the omissions. But then if you use your opening balance, it means you need to take into consideration everything, which is going to waste time. And then also you go to your supplier reconciliation, also enter your closing balance. So enter your closing balance. So it's your balance as per the supplier statement. So where do you get this balance? It's basically your closing balance here at the bottom or here. So it's the same thing. So you take the closing balance. Okay, fine. So now let's deal with our errors. So now we look at these errors and try to figure out who made the mistake. Cool. So now go to your trade to your additional information. Sorry, go to your additional information. So here it says the first additional information says the trade discount was not excluded from invoice 001 by the supplier. So the supplier forgot to exclude a trade discount when we made a purchase. So if you look here, invoice 001, which is this invoice here. So this invoice here, in the supplier statement, it says 4,560, but then in our books, the same invoice. So if you look at an invoice in the supplier statement, when you come to our books, you look at a goods receipts voucher. Because if you remember on Pastel, if you purchase goods from a supplier, you do your purchase order and then goods receipt voucher and then supplier invoice, which is this one here. So here we look at the invoice, here we look at the goods receipt voucher, which is 001 and 001. Fine. So here it says 4,560, here it says 4,000. So basically we excluded the discount, but then they forgot to exclude the discount. So now the discount is how much? It's 560. If you take the two amounts, you less them, and then you'll get 560. So now, who made the mistake? So the supplier made the mistake. So now when you get to your reconciliation statement, what do? You tell the supplier that, no, my guy, you made a mistake here. So what's the mistake? You forgot to less a trade discount on invoice 001. So now this is you telling the supplier that they need to fix this thing. How? They need to less the trade discount on invoice 001, because now they included a 560 here discount to the amount that we owe them, and we don't basically owe them that 506 because it was supposed to be a discount. So now we need to less that same 560. So now this is what you're telling them, that you need to less a trade discount on invoice 001 for 560. So you're done now with the transaction. So if you go here, these two amounts, 1, 2, so now basically we're done with these two things. So we're done with this, and we're also done with this. Sharp. So now we're moving on. So you go to additional information again. Now it says invoice 003 was omitted from the accounting records by error. So every time they say from the accounting records, it means they mean our subsidiary ledger, which is this one. So now they're telling us that invoice 003, we forgot to include it in our accounting records. So we go here, which one is invoice 003? It's this one. So it's for 6,500. So it was an invoice. So it means us as a business, we made a purchase from the supplier, and then we forgot to include that purchase in our accounting records. So we purchased on credit. So basically, where we're fixing it in our books, because we are the one that forgot to place the purchase. So here you go right, because it's on a credit side, because it increases the amount that you owe to the supplier. So you write inventory plus VAT, and then here you write the amount. So why am I writing inventory plus VAT? If you think of your journals, so trade payables amount, so trade payables, trade receivables, and bank, those amounts are always inclusive of VAT. So if you do your journals, what were you going to do? You're going to debit what? You're going to debit your inventory with the exclusive amount, and then you're going to debit your input VAT with the VAT amount, and then you add both amounts to get what? Your trade payables, which was going to be credited. So this is what I'm doing here. So it's my inventory plus my VAT, which will give me 6,500. So I hope everyone is fine. Moving on. So now, sorry for being fast. I'm trying to make this video as short as possible so that it doesn't eat much space and data. So now we're going to invoice 004. So it's the third additional information. Invoice 004 was for a customer named Pro Price. So this invoice was for a customer named Pro Price. And remember, what's our name? Our name is Bluebells. So basically, the invoice 004, which is this one. Okay, we're done with this one. Invoice 004, which is this one. So it's the 7,800. So this invoice was for a customer named Pro Price. So these people included an amount of 7.8 to the amount that we owe, of which we didn't make a purchase of that amount. So they included this amount on the wrong customer. So this amount, they were not supposed to include it in our statement, but in a statement of another customer. So now you go here. Now you tell them, no, you included something, an incorrect invoice, which is invoice 004. And that invoice increased the amount that we owe you, and we're not supposed to owe you that amount. So that's why you say less incorrect invoice, which is for how much? That invoice is for 7,800. So now this is you telling them that you need to less the incorrect invoice, which is invoice 004. That invoice is for 7,800, because now when they included this invoice increased the amount that you owe to them. So now they need to less that amount. So fine. Then now we're moving on. Then now, additional information number 4, it says a credit note. So a credit note was omitted from the accounting records. So we forgot to include a credit note in our accounting records. If we go here, which credit note is that? We're done with this. Okay. So we're done with this. So now this is the invoice, which is I'm on the credit note, sorry, credit note 001. So we forgot to include this credit note in our accounting records. So now we go to our accounting records. It's a credit note, so it means we return some of the goods that we purchased previously to the supplier. So it comes when? On the credit side. So it's inventory and VAT again. Remember your journals, you are going to credit inventory, you are going to credit input VAT, and then you are going to debit what? Your trade payables account, because you're reducing the amount that you owe to the supplier, of which what's the amount? The amount is 450. I hope everyone is fine there again. So yeah, and then now we go to additional information number 5. So additional information number 5, it says credit note 002 has been recorded correctly in the subsidiary ledger. Okay, so what are they saying? So if you go to credit note 002, which is this one here, credit note 002 for 1,230, we go to our books. So a credit note on the supplier will be a return to supplier on the subsidiary ledger. So credit note 002 here, it's supposed to be credit note. It's supposed to be returned to supplier. So it's on the 15th here, and also here it's on the 15th. So this is the same credit note. So we recorded 1,100, but then they recorded 1,230. And then now our additional information is telling us that we are the ones that recorded the correct amount. So basically, who made the mistake? It means this person made the mistake. Okay, so let's try and understand this now. So we returned some of the goods to the supplier. After returning some of the goods to the supplier, those goods were worth how much? Those goods were worth 101.1. So they were worth 1.1. So the supplier was supposed to less the value of 1.1 here, because now we return goods to you, that is 1.1. So now we don't owe you that 1.1 because now the goods are returned to you. But then now what the supplier did is that he left a more amount, which is what? A 1,430. So if you find the difference there, I think it's like 130. So now the supplier was supposed to less 1.1, but then the supplier subtracted 1,230. So basically they overstated the credit note. So now us as a business acting in good faith, this is us telling them that no, you are supposed to only minus 1.1, but then you minus how much? You minus 1,230. So now we still owe you a further 130 from this credit note, because now you overstated your credit note. So now this is you telling them that no, you need to add back the incorrect amount that you subtracted from this credit note, which is 002, and then you take the amount that they subtracted, which was 101.2.30 minus 1.1, so which will give you how much? 130. So now this 130, you're adding it back to the amount that you owe to them, because now they subtracted it and we haven't made any payment for this 130. So now this is you acting in good faith. No, we actually owe you more than what you subtracted, because you're only supposed to subtract 1.1, but then now you subtracted 130 more. So now you need to add it back again. So we still owe you this 130. I know that can be a bit of confusing, but then I hope you understand. You can ask questions later on. And then now we go to the last transaction, which is this one. So here they're telling us what? What are they telling us? They're saying the supplier made an error on the receipt 001 and recorded the incorrect amount. So who made the error? The supplier. As soon as you read this thing that the supplier made an error, you know that this error is supposed to be corrected in the reconciliation statement. So we go here. Let's go to that. So it's this one. So if you look here, they said we paid them, but then they said we only paid them how much? We only paid them 2.5. And then if you look here, we made a payment of 3,000. So now the additional information is telling us that these people, we paid them 3,000. They only recorded 2.5. So now so it's here. So we made a payment to these people to reduce obviously the amount that we owe to them. And then they were supposed to reduce this amount by 3,000. But then now they only reduced this amount by 2.5. So now this is us telling them that no, I paid you 3,000. So you need to less another 500, because now where is the other 500 of which I paid you? You need to reduce this amount by a further 500 that I paid you in the 3,000. So that's why you're saying you less the incorrect amount, which is the 3,000 which I paid you, and the 2.5 which you which is the one that you recorded. So now you need to subtract to the amount that I owe you a further 500, because now I don't owe you this 500. I hope everyone is fine there again. And then now we are done with all your transactions. So if you look at these two things now, at the end of the day, the closing balances, so this balance here, so this balance here and this balance here, it's supposed to be the same balance. So basically these two things are supposed to balance now, because it's the same transactions just recorded in two different views, but then same transaction, so it's supposed to balance. So let's see if we balance. So if you add this side, you're going to get 19,745, and then it's supposed to be here, knowing the law of debits and credits. And then now take this one minus the 450, it was going to give you how much? The 19,295. And then here you bring it down, so it's carried down, brought down. So now this is supposed to be the closing balance basically that we owe to our supplier. So now this same amount is supposed to come here. Fine, but then now let's see if it really balances now. So let's remove this amount here. Let's see if it really balances. So you're going to say equals to, and then we add everything here on top. Sorry, Excel is mooring me now. So you add everything here on top like this, so it's the same amount. So now it balances. So you think, so this is the basically, this was supposed to be the closing balance that we had in the first place. So now we fixed all the omissions and errors. So now this is the closing balance that we have. So now me doing this thing simultaneously, by the time I'm done with everything. And I save time because I'm done with every transaction. I'm basically done with all the tutorial now. So yeah, thank you. And then this tutorial will be posted today, which is Monday, and then you guys will have time to ask questions tomorrow. All your groups will be open tomorrow, and then you can ask your questions, because tomorrow you guys are not writing. Ask your questions, and then later on in the week, there will be a video again that will be posted on inventory past papers. So we'll be discussing inventory past papers with you, so that Friday we are well prepared.